Hello, everyone. I think everyone on this call knows who I am. I'm Zap, community lead at the EC. Usually, I bring people together in person, but at this point in time, it's been virtual. So thanks for sticking with us. I've been trying to put on, at least 1 to 2 webinars a week. And thanks for tuning in. Let me know if you have anything that you want to see. But today, I'm super excited. I've been dying to have Nigel on here to talk about sales, just because that's kind of what everyone wants to hear about. I hear it all the time. Let's talk about sales, sales, sales. Well, he's your guy. And he's also involved with a lot of startups, which he will talk about. But anyways, Nigel, I will give you the floor.
Thanks, Zap. I appreciate you having me. It is strange times that we're living in, but I think that it's all in how you choose to see the world, and I think that's important to start there for 2 reasons. I don't think that there's anybody that I interact with on a daily basis that feels less connected. I think that it's a different type of connection, but there's certainly an opportunity to still be very connected with people. And in fact, I'm finding myself catching up with old college buddies for happy hours on Zoom. And, we would have never gotten together regardless, but the fact that, we're in Zoom and it's kind of become the new cultural norm, I think that people are starting to use it as a way to reinvigorate old relationships, which gets to the point. I had a reporter ask me last week, are people buying? And I just kind of laughed and I said, her name's Elaine. I said, Elaine, of course people are buying. I mean, you can't go get toilet paper. There's a beef shortage. What people are buying and why they're buying has changed, but everyone's buying. And it comes back to how you choose to see the world. And so today we're going to have a conversation about selling and why I think it's the only thing that matters in business above anything else that you do. And this is not going to be a conversation about selling during COVID or selling during a crisis. It's going to be really just a conversation about the founder's role in selling, early stage selling, and how you scale your business through sales. While I'm pulling up my screen to share, what I'd like to do, if you would humor me, is just tell me, just kind of if you could, in the chat, what's your title? I'm trying to get a sense for how many founders I have here, how many CEOs versus how many full-time selling professionals. I just want to get a sense for the dynamics of our room so that I can make the content most relevant for you. We'll give everybody just a couple of seconds. And let's see here. Pull up the chat.
Looks like we have a lot of founders.
Perfect. Yeah, this is going to be perfect. Okay, great. Okay, so we're going to talk about successful startups, scaling sales, and revenue. And I think that what you're going to find for me is that while I love venture funding, I do a little bit myself. I'm on the board of 4 early stage companies. I don't think it's the path for everyone, and I think it can be a crutch. And we're coming into a season in the economy where it's going to be even harder to raise money. So I have an alternative for you founders that I think is easier, more sustainable, and ultimately will help your valuation later down the road if you choose to go get funding. So let me get started. So this is me. I wrote a book about this. It's my life's work. I work with founders, I work with investors, and I work with sales leaders and companies to help them think about how to scale and grow their business. I was an executive for 10 years. I've worked in Fortune 500 companies, and I've worked in and still work in early stage companies. I've had 2 favorable exits and want to share what I've learned through that experience with you. So a little bit about my journey. Most of it has been in healthcare, but in the past few years, I've found myself beginning to work more and more with tech companies that have a solution that is disintermediating the way in which care has been delivered. And that's relevant, I think, to a lot of this crew, because outside of healthcare, you're still thinking about ways in which you can use technology or a new way of doing things that disrupts the normal way in which business has been transacted. So this is what I've done over the last decade, and let's get in and start talking about you. So one of my mentors is Peter Drucker. He's an old Grammy cat. You can tell I got some inspiration from him. He says, if you're not reading, you're doing it wrong. And I love to read. But he says that the only definitive purpose of a business is to create a customer. All right. So that's not to have a really good product. It's not to have a fancy brand. It's only to create a customer. Everything else is secondary behind creating the customer. So the reason that's important is you obviously, we do these plans, and we plan for how we're going to refine the product, how we're going to hire the right people. But in the first principle of my book, I talk about planning, and planning, the plan itself, if you haven't already seen this in your business, is absolutely useless. But the essence and the practice of planning is just paramount. It's indispensable. And that's what Dwight Eisenhower says. There's no better way, no better practice than planning. I want to get a sense here from this group, the extent to which you plan your selling activities. And we're going to go into detail about that, because sales it's really a math equation. And good sales leaders not only have a plan for the selling year, but they also have it broken down into quarterly and monthly tranches, and then they plan at the account level. And that's what we're going to get to today. Is we're going to talk about the number one thing that you have to do is you have to take your goal, your sales goal, and you have to take whatever you've committed to your team, to your investors for the year. You have to break it down into January, February, March, and then you have to go even more detailed and assign it to the different types of offerings if you have multiple offerings, and then down to the customer level. So if you don't yet have customers, that's the first thing that we have to do is get customers. Many of you have customers, but I bet most of you on this call haven't taken your revenue goal and actually assigned it to customers you already have and customers you would like to have. So two types of customers: customers we already have, customers we want to have. And you know who they are. You know a short list of 50 to 100 logos that you would love to acquire. How you have to take the activities, the resources, so resources being your time, the money that you have, it all has to be allocated into plans, account specific plans, to get them to become aware of the offering that you have, how you make their business better, and how you're going to acquire them as a logo for your business in the next 3, 6, 12 months. Okay, so now that we've had this plan, the reason why most of you fall short is because your forecasts are just general statements of hope. You hope to be at $1 million this time next year. You hope to double your revenue, but it doesn't have rigorous non-negotiable standards. And what I mean by a standard is this is the minimum acceptable amount that you're willing to tolerate. And it starts with you as the founder, because you're going to set the tone and the culture for how sales is done at your organization. And we're going to get into really, you've got a plan on 4 levels, and that's where we're going to go here. We're going to plan for people, strategy, execution, and cash. So one thing I want to share about this deck is as we go through, you're going to notice different books along the way. I'm going to point you to the resources that if you wanted to go deeper into these principles, you can take these books and you can go study them. But Scaling Up was a book written by Vern Harnish, and he talks about scaling your people, your strategy, execution, and cash. So this is a conversation about scaling your sales. Well, the sales, from my perspective, is the most important function of your business. So if we're going to scale our business, we ought to think about sales and the way we scale them the same way we would any other function in the business. So you've got to have a scale up strategy for your people, your sales strategy, which many of you right now may be thinking about a pivot, the execution, which is how you take and deliver that to the marketplace. Cash, as it relates to sales, is about how much money you're going to invest in acquiring new customers and how you thought about positioning your price in the marketplace. Zap, if we get questions, hit me with them.
Sounds like a plan.
This next book is called The Founder's Mentality. And if you are a founder, many of you are, and you haven't read this book, you need to go out and read it. Okay, so when I talk about planning people around sales, the number one responsibility of a founder and an early stage CEO is to spend no fewer than 3 days of the week in front of the market talking to potential customers. A lot of you are rolling your eyes. A lot of you are saying, I can't do that. I can't tell you how many times I have to intervene on founders because they spend too much of their time in dev sprints, internal meetings, planning out the product, planning out the offering, and they don't yet have enough customers. Okay, so the mind shift you have to make is be in love with the customer you want to have, be in love with the problems that they face, be in love with what your offering does for them, how it makes them feel, and don't care about your product because it's not going to be the same product down the road. So you as a founder have to have an obsession with the customer, and that's the fundamental mentality. And everyone that you hire on your sales team, whether it be your first sales rep, people in the marketing, everyone has to have some assignable number to revenue. That's the way you're going to scale your people. Every job description, every key performance indicator has some tie back to the top line revenue. So then we got to plan our strategy. Okay. And I think this is a very simple example, but it is probably the best example of sales that I've seen. It's a dentist. Everybody here goes to the dentist every 6 months for a cleanup. I hope so. I just hope you do. And it doesn't cost you anything if you have health insurance, or it might cost you $25 to $50. You are paying a nominal fee to get your teeth cleaned. You show up to get your teeth cleaned long enough and often enough, and they're going to talk to you about whitening your teeth. That costs you a little bit more money. Then you come back in and they're going to say, well, you know what, Nigel, you got a beautiful white smile, but can you imagine how much more confident you would be if your teeth were straight? And so they're going to talk about retainers and cosmetic surgery. The reason why I bring this up, many of you in your planning, your sales strategy looks a little bit like this. You've got one offering and you haven't thought through a down market or an up market offering for your customers. So a down market might be you've got one price point, one way to transact with you, but it just doesn't work for a certain type of customers that could get benefit from what you do, but maybe the way you've structured payment or some of the features are too robust. And so you've got to figure out how you can go down market. You've probably got within your core offering some customers that would pay for more, that would pay for more of your time, more sophistication, more customization, and you got to figure out a way to have some upmarket offerings. The reason why this is important, even if you have something that is just a subscription model SaaS offering, is that it gives you a little bit more durability in your sales pipeline. Zap, if we're getting questions, let me know. I just saw it flash and it distracted me. It could just be my ADD.
Don't worry, just someone checking in for recording it. And we are. It'll be on YouTube.
So we're planning our people. The main thing for the founder is spend 3 days in front of customers, not 30 minutes, 3 days. Have a sophisticated offering strategy. Don't just have one offering at one price point for one demographic in the marketplace. Now let's talk about planning execution. There really are only 3 ways to improve sales. You raise your price. That's the easiest. If you go from $10 to $20, you can double your revenue as long as you keep all your customers. You can acquire more customers. That's the second, and that's arguably the hardest thing to do. It's harder to go get more customers. The most overlooked way to grow your business is sell your existing customers something new or something different. The reason why that gets overlooked is because it's just not sexy and it's hard. Okay. But the reason why I think it's easier than acquiring new customers, they already trust you. You've already built some rapport with them with the current offering. And it's just a good lever that a lot of founders and a lot of companies don't use. So what you'll see here in this model, it's very simple, but if you had 1,000 customers that were paying you $100 twice a year, you'd have revenue of $200,000. If you increase the number of new customers by 10%, then gave yourself a 10% increase in the cost of that transaction, and then increase the repurchase frequency by just 10%. So you went 2 to 2.2, you'd have a 33% increase in your overall sales. So you can take this very rudimentary model and you can think about your business, how much you would like to see your sales grow, and begin assigning it to one of these 1, 2, or even all of the ways in which you can grow your sales. You can get more customers, you can raise your price, and you can sell your existing customers something else. So this is how you plan for execution. So we plan for people. We've got a strategy which gives us up market, down market, cross-selling opportunities. And now we're going to go ahead and assign that new revenue growth to the 3 different ways that we can improve our revenue position by raising our price, getting more customers, and selling them something different. Okay, cash. I love this book, The Customer Funded Business, because I'm kind of anti-funding for a lot of early stage companies. I think you go to get funding too early. You don't need it. You don't know what your product really is. It's not necessarily viable. You're going to burn through cash. You're going to make your investors unhappy, and it's not going to work out for you. So I think you need to go read this book, because I think there are ways to just improve your sales or to get customers to take more risk in your offering, so that when you do need to go raise money, it's a better outcome for you. The technology, the cost of technology declining over time has made it easier for customers to fund your business than it's ever been before. The 5 benefits of planning around focusing on customer acquisition versus getting more funding is that when you go out to raise capital, you take your eye off the market. You're no longer paying, your customer becomes the venture funds and the equity sponsors and the angels, and it's no longer acquiring more customers, which is actually going to hurt your run rate. Your sales are going to go down because you're not paying attention to it, which is going to hurt your valuation. So it really sets into motion a set of negative consequences that are going to affect the overall outcome of the business. So I like focusing more on getting customers, improving revenue versus raising money. The second is when you get more orders, then you have it's a better way to go. Winning customer orders often gives your customers a vested interest in your success. And so this is an opportunity to go to your customers and ask them if they want to fund a new offering, if they want to fund new features versus having to go raise money. The third one here is that when you can show to an investor an ability to predictably and scalably acquire customers, the terms and the valuation for you as the founder are going to be far better. You are not an early stage, more speculative business. You're actually a business that's scaling, and there's a better model for it. And then, so if you go here to number 4, I'm gonna move my computer a little bit so I can see it. Again, this gets back to going back to your customers. And I can't tell you how many clients that I've worked with that we've stopped an investment round and we've gone to the core customers and said, we need cash. And they've jumped on board and they've made very sizable contributions to the business. And oftentimes the terms aren't even in exchange for equity. It's just in more favorable terms in the way that we're doing business with them, or it's proprietary proprietary pieces of technology or proprietary enhancements to the offering that we're not taking to the market. So there are other ways to think about it. And then finally, and this is a challenge from a cash perspective that I want to give to all of the entrepreneurs on this call, is that you got to know at your current burn rate, your monthly expenses, what does it take for you to break even? How quickly can you get to cash flow neutral? Because as soon as you can get to that break even point, it changes the way you think about raising. So my encouragement to you is if you can spend more time focusing on the sales and acquiring customers and less time thinking about how much money you need to finish building out your offering, you're gonna look up one day and say, maybe I don't even need to raise money, which means you don't have to give a piece of your company away, and the outcome's going to be even better for you. So here's why, in this I couldn't say it any better than this. The reason why it's so important is for most people on this call, you're building something in a market. When you succeed, you will have built something in a market that you didn't start out in, with a product or service that may not even look anything like the one you started, selling it to customers you didn't even think you would sell to, with a purpose being different than the first one you designed. So I see businesses change, pivot, that's the big sexy word. They're pivoting, and they raise money to go do something that they're not even doing anymore, and you've left your investor scratching your head. So I want you to take all that energy and focus it into just acquiring more customers. And again, I've showed you 3 levers that you can do that I think are really straightforward and really practical ways to do it today. Zach, I want to answer questions. So I intentionally went through this in 20 minutes because I think the value is going to be, hopefully I've sparked some questions for you. I've challenged you in some way. And now you get 40 minutes to pepper me with, well, this doesn't work for me, or tell me why what I just said won't work in your business, and we can talk about it.
Awesome. Let's open it up. Hopefully people won't be too shy. They tend to be shy on video, but we'll pry them out of their shells. Anybody have any questions for Nigel? You can chat them in, or you can you can unmute yourself and just kind of say them in.
Nigel, Hayley here.
Hayley, how are you?
I'm well, thank you. Thank you for that. This is my second time in business, and both times, the first time was up in Massachusetts, and of course we got a lot of eggheads in Massachusetts, so they wanted to talk about my business plan. I wanted to talk about getting a customer, and I followed that instinct. I'm a salesman by nature and training, and so I went out and got a customer, and 14 years later, I was sold a business. So I'm back in business again, and this was all self-funded. I didn't go for any funding because, frankly, I wasn't sophisticated enough to understand the process. So I figured if I get enough customers, I create some margin, I'll have a business. So I guess my question to you is, as I'm moving through the process the second time here and thinking about self-funding versus going out and getting capital, and to your point a moment ago, the markets look very different today than they did a year ago, at least my market. I'm in the recycling business. So, recycling markets have collapsed, entire industries have shifted. Should I be rethinking my original ideas about self-funding? It doesn't sound that way, but I want to make sure I'm not missing something in your presentation.
I am not, it's a very good question. It's nuanced, right? Okay, so that's where I'll start, is to say I'm not adverse to funding. I think that a customer-funded business, which can take a lot of different appearances. It can be just through the ways the transactional value, a subscription model, a joint venture. Those are going to be more favorable, and those businesses tend to wrap and scale faster than the funded businesses do, because of all the noise that comes from raising money. I mean, there's real noise with having to do investor relations, keeping them up to speed, being a good fiduciary of their money. And I think that running a lean business and growing organically, customer by customer, I think it forces you to not be so frothy in the way you spend your money, and you just be a better, you're a better budgeter, and I think you ultimately have a healthier business along the way. If I were you, I would try to think about, who is my customer, what am I selling them, and then how quickly can I get in and find new things to sell those first 3 or 4 early adopters. Or maybe ask them to co-invest and figure out how your business can be an extension of what they're doing. That's the way I think about it. It's the model that's been working well for a lot of the businesses I work with. But again, the point I want to make is I think it's a better model. I think you're thinking about it the right way, but I am not adverse to funding.
Gotcha. Thank you.
We had another question in the chat, Nigel, from Gingy. How do you approach customer funding if you're a B2C model? So can you kind of explain what that might look like, selling to companies?
Yeah, so in a B2C model, so customer funding is the Kickstarter model, right? So we're going to go out and solicit your payment before we even begin building this thing. We're going to see if there's enough market interest before we even start. We've got to get a certain minimum viability, or we're not even going to do this. That's the way that a lot of customer funding happens in the B2C space. So there's a lot of pre-launch work done And I think Jeff Walker has a great model for that. He has a book called Product Launch Formula, if you're in the B2C space, that talks about the most scientific approach to launching a model and creating scarcity and getting your customers to buy in and give you cash to fund the development or the production of whatever it is that you need to sell.
There's another.
This is Chandra.
Oh, I'll let Chandra go.
Yeah, hi. Thank you very much. This is great. Just wondering if I want to, early starter going into the market, for sales, how do you, with sales team, how do you kind of design a payment model? Is it like, early stage, we may not be having so much capital to pay the salaries. So is there a good model where, like anybody's like taking just the percentage of what the revenue is instead of the salary plus the bonus?
That's a great question. Here's what I tell, I get asked this question all the time. When should I hire a sales team? At the very last minute. Okay, sales teams are expensive. Even though they contribute to revenue, they cost a lot because the really good salespeople are, they're doing well at their job, earning good commission. So for you to go get them out of their job is going to cost you more than what they're already making. I like this idea of renting a sales team before you need to buy one. And the way I think about renting a sales team is think about your offering. Think about what you're trying to do in the marketplace. Who already has the attention of your customer? Do they have a sales team? If they do, can you reach out to their salespeople, put your offering into that sales rep's portfolio and pay them a contingent commission when they make an introduction or they make a sale? The healthcare world does this very well in the distribution space. So maybe you've seen driving around Nashville, the Cardinal Health trucks or the Owens and Minor or the Medline trucks. They have a sales team that is, for Medline example, they have 1,200 sales reps in the United States. All of them are 1099. Medline, while it produces some of its own manufactured products, largely distributes other people's products. Their sales team goes out and sells other people's offerings and gets paid by them to sell it. And the reason it works is because the Medline rep has the attention of the customer. So in your offering, I'm wondering, what is already being sold into your customer by another company, by a sales team that you can bolt on your offering and pay them a 1099 commission to sell your stuff? That's where I would start.
Thank you. That's great, actually. That's a good information. Appreciate it.
If I could actually follow up on that, Nigel, piggyback with my own question, I'm just curious because I've seen so many startups do different things. Of their first sales hire could be like, I see them get a VP of sales. I see them get a recent college grad who they're just going to grind out. I see them find someone in the middle of that. Like, what do you think is the right first? Or does it just depend on so many other factors?
It depends on a lot of factors. Generally speaking, I see too many startups going and hiring a VP of sales when really they just need a sales rep. And I talk about this in my book. There's an entire section to executives that says, don't hire a VP of sales. They think that the title VP is going to bring a certain level of sophistication to the role. And in some instances it does, but it also brings, what you really need in that first hire is an evangelist. I tell them to go hire an evangelist. Go hire someone who thinks that your offering has this life-changing power. If they can do that, I don't care if they're a college graduate or they got 20 years experience. What you need when you're early stage is someone that can go promote and persuade customers that what you've built is irreplaceable. And that's what an evangelist does. And so you got to hire someone, I don't care how old they are, where they came from, that is at their core an evangelizer. And that's what early stage companies need to be looking for.
Awesome. Pablo had a question in the chat. What do you think is the best way to acquire, big companies as customers? So let's say a company that has more than 2 billion in revenue as clients. Like, how would you go about kind of getting in touch with them even?
Well, I don't, this seems like a bad place to start. Pablo, could you give me a little bit more context, because I'm afraid I don't have enough. I don't want to give you bad advice. And I'm happy to wait a second because it's as important.
I'm trying to unmute him. Well, either way, Chris Matthew wanted to have a question, and he said he's standing by. I don't know if Chris, you wanted to unmute yourself and ask your question.
Yeah, thanks. Hey, Nigel, how you doing,
Hey, buddy.
man?
Good, man. Good to see you.
Good to see you too. So, I think I like one of the things you mentioned there, that we need to break down. Hope is not a strategy.
Yeah.
We need to break down into actionable items. So I look at the year as inventory. We have 12 months of inventory.
That's right.
So here we are. We're in May. We've already
Mhm.
lost 4 months of inventory. The pressure, you could say, easy math, let's just say we want to make $100,000 a month. And we didn't hit that the first 4 months. So now the pressure is we got to make that in the coming months ahead and still stay on target. So how do you, when you miss, how do you make up for that without losing track, without people then getting sucked into the process of feeling overwhelmed, lost, fixated on the fact that they lost the previous months, and that they don't see the momentum being created to be able to make sure that they can reach the goal in the end?
Yeah, you're talking about something that can be a very dangerous pattern for a team and a leader, and that is trying to make up too much too fast. Okay, so when I like to use the analogy of baseball. Baseball is a long season, 162 games. You're not going to make the pennant in March, April, or May. Okay, so it's okay to get behind a little bit because you do have the benefit of some time. Good baseball teams try to break it down into days and games. And so the analogy for a sales leader and for a producer that's finding themselves behind is you won't make up a month in a month, but you can double an hour, you can double in a day, and you want to start linking together really good days. Here's where it gets really dangerous. If you go into it thinking with this false sense that you can make up too much ground too fast, you burn out. And actually, Jim Collins talks about this in Great by Choice. He talks about two teams that were trying to be the first team to the South Pole. One team got there and got back on the exact day they said they would return. The rest of them perished. One of the fundamental reasons why the team that perished didn't make it back is because when it was good weather, they overexerted themselves. And when it was bad weather, they stayed sheltered down. So he came up with this concept of a 20-mile march. And the point is you've got to set a minimum threshold and an upper limit day in and day out. Good circumstances, bad circumstances, you got to march. You got to stay within that threshold. You can't look back. If you only got 15 miles done yesterday, you got it. You can only do 20 today. There's no point doing 40 and being so tired that tomorrow you can't even do 10. Right. So you got to say, so it's May. I've got June through December. How many days do I have? How do I take my goal and the gap, what I want to make up, and how can I start assigning it down to days? Does it mean I may have to start working Saturday? Does it mean I may need to hire more staff to basically buy more days in the form of additional headcount? Maybe. But the danger is, and this is what you're speaking to, is don't let your rearview mirror cause you to overexert your team to try to do too much too fast, that you exhaust by October when you had a chance of getting there, but now you've run a team ragged and you can't get there in November and December.
Yeah, thank you, man. I appreciate it.
Following up on, I think you were mentioning it when we were talking about the selling B2C, the book Product Launch Formula. Who was the author again? Was that the correct title of it?
Yeah, Jeff Walker.
Jeff Walker. And then Shawnee had a question on larger contracts. How do you track progress towards a sale or likelihood of a sale?
Absolutely. So closing a large deal is not an event. It's a process. Okay. And there are basically 10 commitments that we have to get along the way. And it starts with the commitment to explore, all the way down to the 10th commitment is the commitment to execute. These long sales cycles, the best book on that is called The Lost Art of Closing. It's written by an author named Anthony Iannarino. And I'm sorry, I just don't want to steal their work. And there's so much beauty in what these guys talk about. Anthony Iannarino's book called The Lost Art of Closing tells you the 10 commitments that you got to make in order to close some of these long sales cycle, large transactional dollar amount deals. And if you go read that book, that's going to break it down. Basically, you got to get people to commit to explore, commit to collaborate, commit to change, commitment to execute, commitment to implement. There's all these different micro commitments you got to get along the way. And when they refuse to make the commitment, that's a sign that your deal is off track.
Will you say the author's last name again?
Iannarino, Iannarino.
Boom. Right there.
What we ought to do is ought to send out an email to everybody, just all the books. I can do that if you want me to.
Yeah, write it up and I can send it to everyone. I do think Pablo is here with us finally.
Bring it, Pablo.
Hi, Nigel. Thank you.
Hey, man.
So my question is, my client is healthcare companies like Ascension, Arden Health, Acadia, something like that. And all the healthcare companies, their revenue is very big, like 2, 3, 8 billion per year. So the trade shows is a very slow way. So how do you think, or what is the best way to approach these people online or through LinkedIn, emails, other people, trying to other partnerships? So what do you think about this? Thank you.
Yeah, so most of those large healthcare systems have like purchasing committees. Okay, so most of the disposable goods and services are managed by what's called a group purchasing organization. That's where they get a lot of their supplies. And you basically either have a contract with that GPO or you don't. If your offering is not on some GPO schedule, you have a better chance of probably getting a deal done than if your offering is on the GPO schedule. Typically, those GPO schedules have exclusive agreements, or they have restricted agreements, and the time to get on a GPO for your offering can take years. That aside, they typically, even though they are big companies like Ascension, Ascension is it's in 7 states, and but it's broken down into different ministries and different markets. So you got to find the crack in the dam. You got to find one person inside that organization that has influence, that's willing to champion you and your company and take you up the chain of command. So instead of taking a top-down approach, I would take a bottom-up approach. And if you can build in little influencers and little champions and enough departments that have influence that can connect you, it's going to be a slog and a real heavy lift, but I think you can get it done.
Thank you.
I've got another question, if that's all right.
Always, yeah.
I see you, obviously, you're on LinkedIn all the time.
All the time, yeah.
What is your sense about, and thank you, because you're a great contributor to the ecosystem that everyone's trying to engage with, but what's your sense on social media and approaching people cold through social media and trying to create that initial connection with the businesses ultimately you're trying to win over?
I loathe social media, can't stand it, but recognize its place in the marketplace. And I think that, social media is an all-encompassing genre. I mean, TikTok and LinkedIn couldn't be on farther into the spectrum. Your customers are on social media. That's undeniable. Context is so important. Okay. I'm on Facebook. I'm on LinkedIn. I don't talk about work on Facebook and LinkedIn. on Facebook and Instagram. My customers are on Facebook and Instagram. They're not looking for advice on how to improve their sales when they're on Facebook. They're wanting to see pictures of my kids and their friends' kids. So I don't talk about it there. The point is context. LinkedIn, I use that platform because it is about thought leadership, business connections. I talk about business there. I look at it as it's my responsibility to serve. I'm trying to help you. When I post this, it's about helping you. So if you look at it through the lens of serving and not being self-congratulatory, that context, it's almost a responsibility to reach out cold because you're helping them solve a problem and you're not asking them for anything. You're just trying to help. I think you have to do it. I think it's so important to understand the context, because if the context is wrong, the intention doesn't matter. If I really want to serve you and help you be a better sales leader, but I'm on Instagram and you really are just trying to get a workout from home, that's not going to be the context is off. So it's not going to resonate. So I think you got to understand what's the context of the cold outreach, what's the context of the platform, and is your customer receptive on that platform?
Thanks.
I actually have a follow-up question on that, Nigel. I feel like you kind of are like making yourself into a brand, and you kind of made some cool comments to me before this whole thing started that I'd love to talk more about. But how do you think about, like, I guess, your social media brand and how you're kind of selling that brand?
Well, so I am a company of one, and it's just me. And it took me a while to realize that what I'm selling is in my head. It is not scalable. So here I am telling you about a business that has one flaw. It's not infinitely scalable. Okay. So, in the same, Chris asking about how do I make up for things, that's the problem for me, is making up on lost revenue in months. I don't get to, because I've already set a capitative amount of revenue that I'm going to do, because anything above that comes at an opportunity cost of time with my family or other hobbies. But I'm a business of me. There's only so much of the product that can be sold every month, and it's my responsibility to maximize that. And I think of it as a formula. Like, I'm in the reputation business. If anybody that's in a company of one business is in the reputation business, and a reputation formula is results times reach. That's how you build a reputation. I tend to err on the side of focusing on just the results. If you neglect the reach, it doesn't matter what the results are, you won't have a reputation. If you're in the reputation business and you just focus on reach, you just worry about your followers, you just worry about how much press you're getting, but you churn through customers because you don't do good work, you're not going to be in the reputation business very long. You won't have a good one. So that's how I think about building a personal brand. And I think that how that translates is, if you're a founder, you need to build a personal brand. And it doesn't need to be just the business. I think you need to have your own brand, because let's face it, if you do this business right, it's going to go away. It's going to be somebody else's baby at some point, or maybe it evolves. But I don't think there's ever really a harm in building out your own personal brand that's independent of what the business is doing.
Awesome. Mackenzie has a question. Mackenzie, did you want to unmute yourself? Uh-oh, where'd Mackenzie go? I heard her.
I heard her for just a second too. Now she's
I know,
muted
she unmuted herself.
Zap, am I showing up as Mackenzie?
Oh, yes, you are. I'm so sorry. Maybe.
I for some reason have my daughter's name on my chat, which is embarrassing.
Wait, who is this?
This is Chris Wilcox.
Oh, hey, Chris.
That's embarrassing. I'll have to figure out what happened. My question is, we're in the process right now of completing our discovery phase, trying to understand who our customer is and really trying to get our product right. My question is, tips on taking that first step to, hey, we've done our research, we feel like we understand our customer well enough. Tips on taking those first steps to getting those first early sales, trying to understand, get some validation on the product.
Yeah. Have you given it away to anyone?
Yes. Mm-hmm.
Okay. Is that how you set out to get some validation?
Well, I mean, it's just how we're kind of in that testing phase right now. We've done some early research, kind of tested some basic assumptions. Now we're putting it in the hands of people, kind of taking it to the next step. The hope is we're maybe another step away from actually trying to see, trying to get some sales. That's what we're trying to understand. What steps do we take from there?
So what's the feedback that you received from the customers that you gave the product to?
We just started that phase.
Okay,
right
perfect.
now.
Chris sent it to me yesterday. I promise I'll get you feedback by the end of the week.
So Chris, one of the two things that I want you to do is I want you to figure out a structured set of survey questions to solicit the feedback, and structured is the key word. You want it to be the same for everyone that you gave it away to. How many people did you give it away to?
We had 10 copies initially. It's pretty decent cost. So we started with 10. We're going to scale it up from there.
Okay. Is there a way for you to I'm sensitive to your cost. I hear you. I'd like for it to get into the hands of 100 potential customers. So if there's a way to water it down or give them the Cliff Note version of the product, because if you, with a sample size of 10, it's hard to take the structure, even though the feedback is structured, it's hard to do anything with it. So if you can get it into 100 or so people's hands, here's what that allows you to do. You go back and ask them to buy it. A certain number of them will. And then you ask them to also refer you into other people or other businesses that they know that have a similar use of that product. And then you try to incent them for those introductions. That's the first thing that I would do.
Okay. Yeah, that's great.
There was another question in the chat. This one might be a little nuanced, so you might have to unmute yourself, but the founder of the startup that this person works for is afraid of rejection by sales leads and potential strategic partners, and is refusing to communicate with the market and advisors until the product is, quote, ready. Do you feel like this startup is a dead end? We might need a little more information. I don't know if you want to unmute yourself, but that's kind of the question if we want to take a stab.
I would love some more context, because based on that information, you're not going to like my answer. So I would love to be convinced otherwise. Yes. Is this person willing to
I don't
share
know if
more?
it's George or Jorge. If you want.
Well, here's no is the second best answer. It just is. It just means it's time to move on. The answer that should drive you crazy is I don't know, or disingenuous yes. Love a no. I love it, because it just means it's not a good fit, and it's a chance for me to go back and evaluate what did I get wrong in the positioning or the messaging, or what did I get wrong in the targeting to think that this person needed what I had to offer. No is great. The more no's you get, the closer you are to a yes. This whole notion of waiting until it's perfect. Look, if anyone waited until they were ready to have kids, none of us would be here. If you're waiting until you get your product perfect, the ship's going to sail, and you're not going to have a market. It's going to be over. It's time to go. Ship it.
He said thank you.
Okay.
Any other questions? Don't be shy. Otherwise, I feel like Chris might have a third question. Who knows?
So I have one more thing that I'll share before we leave, if that's okay. If I can get this back up. So after being asked this question, I don't even know how many times. Can you guys see my screen?
Mm-hmm.
I get this question all the time. What are you reading? You can see the bookshelf behind me. For the past 10 years, I read 4 to 5 leadership, sales, or investing books a month. And I have been so selfish because I hoard all of those notes in my Kindle notes. And now I've started sharing them. So you can sign up. We're going to get this deck sent out for you to sign up for my required reading. What it does is it saves you the time. I know you guys are busy. You're trying to build your company. You don't have time to read a it doesn't absolve you of your responsibility to read a book. So I will help you out. I will share with you the notes of the things that I read and make recommendations to podcasts that I think you need to listen to. Not the entire podcast, but maybe an episode, or maybe even 7 minutes of an episode. Research papers that I've read. Last month, I sent out a 28-page PDF of my notes, screen grabs from 4 books that I read. And if you want it, I'll give it to you. I don't charge anything for it. And I just think that, again, it's your responsibility. You are the lid on your organization. Your organization is only as good as your worst idea. and your ideas need to come from someone smarter than you, and that's the power of books. And I'm happy to get you guys signed up for my required reading.
I want to be on that list.
Well, you can get on.
I know, we need to start an EC book club. Who's going to do it?
You did already. You already started it.
What do you mean? I started a bookshelf.
Oh, okay.
So a lot of people are reading the same thing, but there's not a coordinated read the same books at once.
Okay.
I don't know, Wesley, if you had a question, I saw you unmuted yourself. It looks like Gingy has a question if it's not too late. You had to make us sit in silence for so long.
So I kind of want to touch more on, you kind of mentioned in one of the questions about customer advocates and getting feedback and information from them. Are there some really innovative ways that you found that makes it very easy for your customers to give you feedback, and then also makes it very easy for them to kind of evangelize your brand to their connections and get other people that they want to share this with involved? Just kind of ways to really make that process easier for them. And then also from your reading list, are there some books that you recommend in that space that really kind of get that right? I mean, in a simple way.
Yeah. So Ryan Levesque wrote a book called Ask.
Right.
Are you familiar with it?
I am.
Okay. I think what he's doing in a structured way to aggregate and synthesize pain points, feedback, and what they want is, especially in the digital space, is just second to none. And then, how do you incentivize them? I think giving them some skin in the game is one of the best ways to do that. I use Entreport for my back-end marketing automation platform, and I choose it over HubSpot, and I choose it over some of these others because they make it worth my while to introduce other entrepreneurs to their business. And I think that there's a lot of power in giving away a percentage of the sale to raving fans that would gladly introduce you in exchange for a little cheese.
I gotcha. Are there any, so much as far as like creating like invitation templates for users or things like that? Like if you have, somebody that loves your product, should you stay away from that sharing of the information, or say, here's a great format that we've had other users, invite other people using this format? Or, the idea is just to kind of make that lift. Our product, one of the big things is that we reduce the cognitive load for our users, in onboarding our products. So kind of continuing in that theme, making it as easy as possible for them to, share their experience or bring people into the fold or provide us with feedback of their experience using our product.
Well, Wesley, have you asked them, like, what would be the easiest?
Absolutely. I mean, I talk to our customers all the time.
And what do they say?
Especially since I've been locked in my house the last couple of months. We get lots of great information. They share out to their friends and family. The nature of our product kind of incentivizes them to invite their friends and family to contribute to their own accounts. And by that virtue, if our product makes sense for those people they invite, it speeds up that sales cycle. And it's been great. We've had so much success with it, but I'm always trying to figure out ways to make that easier for our users to bring people into the fold.
Tell you what, man, one of the most amazing examples, and this is an old one, but it's so true. When Hotmail first came out, nobody even remember. Zab doesn't even know what Hotmail is. Never even seen it. But in every email when I set up a Hotmail account, in the bottom of every one of my emails said, "Get your own Hotmail account." Mm-hmm. That's exactly how Hotmail grew. And I'm trying to remember the book I read that in, but no, it's in Growth Hacker Marketing by Ryan Holiday. That whole book is on like wildly growing, exponentially compounding, basically the principle of compounding interest, but on users, how to get users to continue to pay you dividends. And that's just one of the examples of that Hotmail example of, so if there's a way to embed the fact that you want to induce them in every screen grab or every transaction, I think there's something to that.
That's fantastic. Thank you so much. Really enjoyed this today.
Thanks,
now
guys.
Everyone has their questions. How we were wrapping up, you guys. I think
when there's a time limit, everyone gets.
Chris and Gingy had questions. I know we can squeeze them in here. Whoever speaks first.
I've got time for one more.
One more.
So quick question, Nigel. This is Gingy with my fur baby. We make pet memory chests for pets that have passed away. One of the things that I'm struggling with right now is the brand of me versus the brand of my fur baby. So, you know, when you talk about social and those sorts of things, I know that certainly from a PR standpoint, it would be great if I go out and represent my brand. How do you balance privacy with needs of the business and being your brand as you're building it?
Like your own personal privacy?
Yes.
I think that comes down to context and channel. You know, I'm in the similar boat as you. I mean, my brand is my person, but I have to be selective on the outlet and the platform. You know, if you go to my Facebook, you're going to see me drinking the Miller Lite at 9 o'clock in the morning, but you'll never see that on LinkedIn. You know, and I know that that's an attempt at humor, but I think it's a harsh. You got to figure out what you're comfortable with and where you want to share and what are the extent of your personal brand and where is it relevant, and then where is, you know, does the brand of your business take over? I imagine that there are some voids where you have things in your personal life that probably on the right platform would never even make it to the platform of your customers. And I think you just got to be thoughtful about where do you want to draw those lines, and where do they naturally exist, and think about content that's relevant to acquiring customers and then building your own personal brand. Because, like, you know, for me, I have a whole separate pieces of content around thought leadership for consultants that's probably not relevant to founders and CEOs that are trying to scale their business. So I don't talk about it unless I'm in that right audience. I don't know if that's helpful. I don't feel like I answered your question well.
Thank you. No, I appreciate it.
Awesome. Well, I guess that was the last one, right, Nigel? Any final words you want to send people off with?
Well, so again, I think you can still see my screen. Send me a note here. That's my real email address. I'll send you this deck. You can get into required reading. And I'm also going to fire off to Zaps all the books that I talked about today so that you can go grab a copy if you want them.
Thanks for tuning in, guys. I'll email you. Also, tune in next Tuesday for Pitch for Good. Should be super exciting. But thanks for joining us. Bye, everyone. I'm going to end the meeting.
See ya.